Welcome back to a new video. As always, if you enjoy the content, make sure to leave a like and subscribe. So what we're going to be doing here is going over the trading recap of last week. I'm doing this on Monday, so a little bit late. Probably should have gotten it done on Friday, but nonetheless, we're going to go ahead and get it done. I ended up taking quite a few trades last week. All of them were winners except the one trade where I did end up losing. However, the loss was really small. And actually, if we would have held on the position for maybe a couple more hours, we would actually ended up making money on that, which is crazy. So all in all, pretty good week, as you guys can see over here on the screen. Up $403, crossed over 11,000 for the first time, and all is good. We reached our goal of over 11,000. Now my next goal before the year ends is hopefully end anywhere between 11,500 and above 12,000. So anywhere between that range, I'll be happy. But nonetheless, I have quite a few positions to go over and quite a few trades to recap. So let's go ahead and get right into all the trades. So the first trade I ended up taking was on Tesla. I actually ended up taking two trades last week on Tesla. Both of them were winners, and both of them were around, if I recall, the first one was around $150 gain, and the second one was about $70 gain. But I'm going to go ahead and show them right now. We go down here to the history. We can see that on the 14th, I purchased a Tesla call with a strike price of $625, and we sold it also on the 14th, so it was a day trade at a price of $3,005. So overall, like I said, about a $165 gain on this one. So pretty quick and pretty easy money. And 2 days later, we actually ended up taking another day trade on Tesla. Tesla's been pretty volatile, so that has allowed me to get in and out of the position fairly quickly with a good profit. But you have to take in mind that because of all this volatility, the trade could also go bad pretty quickly, and we have to be able to not let emotions get into our trade and cut losses if the trade were to go bad. But nonetheless, we were able to make a quick $70 profit on this one. So the next trade we ended up taking was on Walmart. What I ended up doing on this trade is buying a couple of calls expiring in about a month and a half, which had the expiration date of January 15th of next year, so 2021. And we bought it on the dip when Walmart was trading right around $146. And if I recall, it was a day trade. So you guys can see on December 14th, we bought 5 calls, if I remember correctly. 5 calls at an average price of $2.68. And then a couple minutes later, we ended up selling them back at $2.83. So a total profit of about $75 on this one. Pretty quick and easy gain, like I said. Volatility has been relatively high on most of these stocks, so that has allowed me to make quick and easy profits. So the next trade we ended up taking was on XLV, which is a financial sector SPY ETF. So basically what that means is it tracks all of the major banks like Wells Fargo, JP Morgan, Bank of America, and all sorts of other banks. But what we ended up doing was buying some calls. I believe we bought about 4 calls, and it wasn't a huge position. It was about a $100 position. Actually, it was a $96 position. We ended up buying 4 contracts at an average price of $24, and I ended up selling the next day just because I didn't like how the price action was moving, and it was sort of it wasn't really downtrending or uptrending. It was kind of just staying in the same position. And so because this is a little bit of a slow move ETF, because it has a lot of banks within the ETF, that means that the time decay, also known as theta, was going to eat up into the premiums of the option. So I was much more comfortable taking the loss and moving that position over to something else than holding on and hoping that the position was probably maybe going to go in my favor by the end of the week, because these were weekly expirations, so the time decay started eating up into the potential profits a lot quicker. However, as you guys can see, over the week, it sort of traded sideways, and then it ended up trading. No, actually, this is this week. This is last week. So it sort of traded sideways, as I said, and then it slowly started moving upwards all the way to a high of $28.75. And I believe these actually ended up in the money because the strike price was $28.50, and we ended up buying when XLV was around $28.30. So if we would have held on about one more day, we would have definitely made a profit. But I'm not too worried, just because all the other positions made a lot more money than the $24 loss we incurred on this trade. The next trade we ended up taking was on Amazon, and what I ended up doing on this trade was a iron condor. If you guys don't know what that is, I have separate videos on that, but in essence, it's basically selling a put credit spread and a call credit spread within the same trade. So in other words, you're predicting that a stock is going to maintain between a certain price point by the time of the expiration of these options. So the legs of the Iron Condor, if I remember correctly, were the short 3,250 call and the short 3,055 put. So essentially what that means was that I was hoping that Amazon stayed anywhere between $3,055 and $3,250 by the end of expiration last week. However, when I ended up buying this, it sort of stayed in the same position for a couple of days. I think one day I ended up holding this position for 2 days. So the first day it sort of stayed within the same position, and so that allowed me to gain some profit going into the second day. However, on the second day where I ended up selling, where's the trade? On the second day when I ended up selling, Amazon actually shot up and gapped up all the way from around 160, which is where I bought it, all the way up to about $122, and it continued going higher, as high as to $3,244. And so that morning when it started gapping up, when it first opened, it opened around 3,180. And so I decided to just take the profits that I had at that point and move on, because I didn't want to risk it, because it ended up showing some momentum, and it potentially, I thought that it was going to go higher, and it indeed ended up going higher, like I said, all the way up to 3,251 actually at one point. So I didn't really want to hold and risk being assigned early or even having the options expire in the money, because that means we have lost the collateral that we had in this trade. However, if we would have held on, you guys can see that Amazon actually ended up expiring. The contracts actually ended up expiring out of the money, and Amazon ended between the range of $3,055 and $3,250. So we would have been able to keep all the premium, but at the end of the day, a $10 gain. What was it? No, it was actually a $16 gain is better than a loss. So I'm happy with the $16 win, even though probably could have made more if we would have held till expiration, because as you guys saw, the options expired worthless, so we would have gotten to keep the full $100 premium. But $16 win better than $400 loss. The next trade we ended up taking was on American Airlines. I actually ended up taking 3 different trades. I believe I ended up selling a couple different cash secured puts. And so if I do recall, I ended up selling to open a 15.5 put for $4, and then 2 $16 put strikes for $72. And so in total, this gain was $76 gain within I think 4 days this trade took. So pretty easy trade, in essence. As long as American Airlines stayed above those prices, I was going to be able to keep the premium without having to buy the stock. And if we did have to buy the stocks, that's a reasonable price range where I'd be comfortable holding and selling covered calls for until they get called away. So honestly, would not have been too worried about it. We actually have a position on American Airlines that I opened up today. Actually, never mind, that was a lie. We did not end up getting filled on that position, but I was hoping to get filled on a position on American Airlines at this price range. The next trade that we ended up taking was on Bank of America, and I think this was a trade that had been going on since last week. We had a total of 200 shares, I believe, because we did end up getting our covered call assigned, so the covered call took the stock away. We were forced to sell, but we also got to keep the difference between the strike that we bought and the strike that we got assigned on the covered call. Plus, we also got to keep the initial premium by selling the covered call. So in total, let's see, I think the average price was around, here we go, $20.35, and we ended up selling at $20.50, and we received a credit of $27. So in total, this gain was around $40, a little bit over, no, actually closer to $50. So $50 gain in about 3 days, not bad. But the bad part was that the banks, all major banks like JP Morgan, Bank of America, and all those other banks ended up getting a stress test by the Federal Reserves. And so basically what that is in essence, how good would they react to a downtrend in the economy. And so the test came back and the results were pretty good, which allowed Bank of America and all these other bank stocks to gap up significantly over the weekend. As you guys can see, the 1 week they were trading around $28.50, and then over the weekend gapped up all the way close to $30. So about $1, a little bit over $1 move. Had we held on and had we not gotten a sign on those covered calls, we would have been able to make a lot more profit because we would still be selling covered calls at a significantly higher price, which means more profit for me. So the last and final trade that we ended up taking was on Pfizer, and this is a trade that's still continuing right now. We're currently down $174, but that's actually a lot less because when we bought it, we sold a covered call, and that was the position that I traded last week. So what we ended up doing was buying 200 shares of Pfizer, and the reason why I bought them was because they were down about $5 from its recent highs, and they're still currently rolling out vaccines. And from what I've read, it seems that they've been doing a relatively good job having a low occurrences of allergy reactions to the medicine. But that's unpredictable because the way vaccines work is they're meant for the mass population. They're not tested on every single individual, and so you can't really know exactly how it's going to behave on every specific individual. But for the most part, as I've read, there's no significant damage to anyone who has taken the vaccines. There's been small side effects like allergies, but currently there has been no evidence of it causing any death. And in my eyes, if it doesn't cause death, then that's a lot better than having COVID. And so that's what I ended up buying. We ended up buying at a average price of what was it? Let me check. $38.24, and we turned around and sold the $30.50 covered call, and we received a premium of $55 for each contract. We sold 2 contracts and received a total premium of $110. So you guys can see Pfizer ended up ending below $38.50, and so we got to keep the shares, and we also got to keep the $110 premium. And so currently right now I still have the shares. I haven't sold any covered calls this week yet because Pfizer is it was down. It was closer to 37. I think it even dipped below 37 at one point today. So I'm kind of hoping that by tomorrow, it might recover a little bit more, and we were able to sell the covered call for a significant higher profit significant higher premium than what we would have received today. Because as you guys can see, we go ahead under trade options and look at the overall movement of the options right now. The 38.5 strike had a low of 9 and a high of 32. And so if we're able to get somewhere between $20 or $30 on this strike, I'd be happy with that. But if not, if it doesn't look like it's going to move too much by tomorrow, I might just sell the $38 strike and call it a week, just because we have a shorter trading week, which means that the premiums in these options is going to be a lot less because there's less time for it to decay. And so that was pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next one.